So that stock should come up for you well in the green. But the two stocks that are really the stocks of the moment, Max Financial up 10.5% right now, and Vodafone Idea, almost 14 crore shares are being traded on Vodafone Idea as we speak. Looking quite fancy, the move on that one, up 7% right now. Tushar, hi, good morning. What are the pockets of strength, according to you, that investors should be positioned in over the next, say, 6 to 12 months?
I think there is clearly a lot to do with earnings growth. We've seen the resilience in earnings numbers translate into significant PE expansion. So here we are not talking about a normal PE scenario. Wherever earnings have been very strong and delivered consistently, we've seen actually an expansion of PE. So if you look at some of the FMCG sectors, we'll see that the expansion of the PE has gone from multiples of 50 to 70 to 80. Though there is no faith that this will continue forever, I think the market is rewarding significant earnings growth. And I think that's where a little bit of a deep dive needs to be done in terms of not only earnings growth over a quarter or so, but consistency in that over a longer period of time. I think that's what's market rewarding right now. For now, the visibility continues to remain in the discretionary sectors. We also see some earnings resilience very much in real estate. We're also seeing some part of this resilience come through in very large banking as well. So I think there are pockets which one can really focus on right now.
Okay. Tushar, what about the mid-cap rally more generally? This is an argument we keep having with every guest. 7 times out of 8, it fizzles. It comes in Jan and fizzles in Feb. But does it have more staying power now, since, as you point out, some earnings are ticking?
Well, very difficult to call right now, Lata, since the phenomenon that we've seen in the large caps, where maybe 5 to 6 large caps have driven the entire large cap index up as well. We are seeing somewhat similar action in the mid cap indexes as well. So what we are seeing is that within the mid caps again, there has been a selective rally, and that has actually led to the mid-cap index also doing what it has done. We haven't seen this kind of earnings growth actually broaden across the spectrum. So this again remains the feature of the day, that follow the earnings, and I think within that there is a little bit of a concentration even in mid-caps. And that's why the small cap picture seems a lot more confusing, because there are so many more companies there, so the concentration is difficult to find. But clearly the mid-caps also continue to remain there. Can the rally sustain going forward? I think it will remain a fact based on the possibility that the earnings then spread to the broader index, and then most of the mid caps, once they start making this kind of earnings growth, then we'll see a very, very substantive rally, hopefully in the next few months or so.
What's the key risk for this market, Tushar? Is it more global in nature because of the whole coronavirus issue, or the fact that if earnings don't pick up this year as well, then perhaps there could be a big decline?
Yeah, I think you identified the two big risks. I think the domestic risk is that earnings growth doesn't come, though I must say that the bet is weak that it will not come, simply for the fact that there's been a substantial reduction in corporate tax rates. So that itself is going to give substantial buoyancy to reported earnings this year as well as next year. And the global events, as you know, these are unpredictable. In fact, I go back to my December outlook piece, and I realized that the coronavirus was nowhere in that, because simply we didn't know that this was going to happen. So clearly there is an estimate that the external events will also drive where markets are likely to go next year. But I think to the extent of what we know, especially about the outbreak this year so far, I think the new cases have started to come off, and I believe that as summer approaches, we should put this behind us. I think the focus shifts back to domestic, and the hope clearly there is much more stronger that earnings this year, at least on a reported basis, will be significantly up there as much as expected.
Tushar, the toast of the year have been the pharma stocks. They have put behind their bare years, you think?
Well, it's a difficult question to answer, because it's not generic in nature, because each of the companies have their own issues, own challenges, and their own responses in terms of how they've taken this issues about hygiene and especially the observations of the FDA, so on and so forth. I think the lessons have been learned. I had mentioned earlier also that these lessons need to be assimilated into operations to really have a big impact. And as you know, organizations take some time before all of this becomes second nature to them. So there's a huge difference in operating procedure that they will need to incorporate. And I think some of the companies are ahead of others. And we are seeing the impact of that as the inspections continue. The level of violations have started to come off, at least in some companies. And as we go forward, I think the learning will clearly now become more solid. So I think the big discount that we had taken because of this lack of earnings growth due to all these observations, at least some of that needs to be now discounted out. And a look at the future looks a lot more rosier as opposed to where we were maybe even a year back.
Okay, the mid-caps are surging now, so 130 points in the green for the mid-cap index. So many stocks. Thomas Cook, as we said, because of that impending share buyback, is up 14%. A couple of stocks, Voltas has hit a fresh 52-week high. In fact, I wanted you to come in on this, Tushar. This whole consumption space, consumer durables, have been doing quite well over the last couple of months. You think the worst of the slowdown is now behind us? And what are the pockets that you like within consumption?
Well, consumption, as you said, is a little bit of a broader word. So you have low ticket consumption, which is staples, and you have higher ticket consumption, which is getting into discretionary spend. I think the discretionary spend is still a little bit of a wait and watch, though even within there are pockets where we've seen pretty strong resilience. India continues to be a consumption story. Whichever way you look at it, our investing into infrastructure and capacity has been much, much lower than, say, the likes of China. But our consumption percentages contribution to the GDP is significantly higher. I think the trend will continue. We do see a pickup slowly again back into high-end consumption. And that could take maybe 6 months to about a year to do, but I think that's something that one can look at. One also is pretty popularly looking at things such as the discretionary space in consumer durables, including, as you mentioned, air conditioners, washing machines, of the like. I think NBFCs, which have been the drivers for such consumption in the last couple of years, have taken a little bit of a breather. But I think, again, as things start to pick up, we should start to see that volume coming back. But how soon and how quickly that will be, still a matter of time. But you can't really go wrong on consumption if you talk about India as an economy. So I think placing bets here could definitely give you some good dividends.
Should we parse this statement to mean that you will start buying auto stocks, two-wheeler or four-wheeler, auto ancillaries, CV financiers?
Well, again, as I said, the timing is suspect here. We don't know. Interest rates clearly are signaling that they are likely to remain low, both across the world as well as in India. So that's a function of how such kind of expenditure is funded. That remains positive. The demand function is the one which we are talking about, which is weak right now. But if there is enough confidence that corporate profits will lead to some more sentimental improvement, then I think that's something that we could look to make some money out of.
Okay, we will leave it at that. Tushar, thank you for being with us on CNBC TV 18. And in fact, we're going to take that discussion forward on, the CV finances that you just spoke about. Shriram Transport has not just been buzzing off late. The stock has been at a 52-week high. The management's focus on profit